Good morning, everybody. This is Matt Thomas and Brian Dewald. Brian, of course, got his own team, the Dewald and Associates team at Fairway Independent Mortgage. And as always, Brian, we want to just check in and chat about mortgages and then just the housing market in general. How you doing this morning?
I'm great, man. Thanks so much for having me again. This is a lot of fun to do, so I appreciate it.
Great. Yeah. What do you have for us today, Brian? Tell us what's going on in the mortgage world, and then if we want to segue into I know you have some interesting housing information as well.
Yeah, I'll share a couple of stats that I read recently. So first off, let's talk about mortgage rates a little bit. We've for the entire year, we've been looking for some stability, right? Just in terms of not crazy ups, not crazy downs. We haven't seen a whole lot of crazy downs in a long time. So, but as fast as things rose earlier this year, we were just hoping for some stability. So It seems like we're starting to get that a little bit. We've had a couple ups and downs as far as days and market updates and things like that, but it's nothing that's been tragic, I suppose, is a good way to put it. So over the last week, it's been pretty stable, which is great.
Yeah, well, the last time we chatted actually was a couple of weeks ago, and I know that things were kind of stabilizing then. It's good to hear that things have kind of remained steady. I know at one point they did actually drop there for a minute, and I think they're kind of back up. And Brian, part of the reason we don't share specific interest rates, right, is because they just fluctuate all the time, every day, right? And
they fluctuate all the time, every day. It's a really good point. So I like to sort of put it into another term, if you will, kind of a layman's term that a lot of people understand, are stock prices, right? So it's really easy just to look on your iPhone and see what stock prices are doing on the daily. Mortgage-backed securities trade as frequently as stock prices do. So it's really up to the minute type stuff as far as, mortgage rates go in the market. The other thing that makes a massive impact, and not a lot of people know this, and this is what's super frustrating about shopping on the internet, is you don't get this information. There are about, 12 to 15 different, things that affect somebody's mortgage rate. It could be from, how much they're putting down, to certainly credit, property type, how long you need a lock for, what type of loan program we're looking for. There's just a million different, DTI is one of them. If you need mortgage, there's just a billion things that go into your rate on the day that it's impossible just to say, here's what today's rate is, if that makes sense.
Sure. So if you're shopping online, you pull up a rate, oh my gosh, I'm thinking about buying a house and I want to check what the rates are. Are they up? Are they down? You could tune in on a specific rate and go, gosh, this looks favorable. Let's jump in. But it may not necessarily pertain to you. You might have a better rate. You might have a worse rate, depending on all the factors you just mentioned. So it's important for people to understand that.
There's always fine print. If you see something that's too good to be true, it probably is.
Right.
If anyone is ever interested, I've got a really funny, it's not at all appropriate for the mass, but I've got a really funny meme. If anybody is interested, they can text me.
Sounds good. Brian, you said you also have some information about the housing market that you found interesting that you saw this morning, right?
Yeah, so there's an outfit, I'm going to read my computer here. So there's an outfit called pulsenomics, and they do a survey. So the Q2 results just came out, and pulsenomics is 114 of the top economists in the United States, and their general consensus is these are kind of cool stats. They're kind of the leaders in forecasting what markets are going to do from a real estate standpoint. They've pretty accurately predicted what has happened over the last decade or so. And their report this morning came out and said that this is nationwide, of course. Denver's usually a little above average when it comes to these stats and stuff, but it says that we should average right around 4.5% to 5% a year over the next 5 years, with a cumulative total in the next 5 years of 26% appreciation. So it's still a really great time to buy. If I start looking at those stats, right, on a $500,000 home, that's another $130,000 in equity in the next 5 years.
Yeah, that's tremendous. And interesting in the sort of in the juxtaposition with, demand is falling, right? And the rates, of course, are going up, so things are getting more expensive. But if you're looking to make a sound investment over the next 5 years, especially with the volatility in the stock market, if these guys are right, you're going to make, you said $130,000, or is that what you said? Basically $130,000 over the next 4 years.
On a $500,000 house,
yeah.
Their calculations are, and like I said, these guys are they're the ones to go to for data. They've accurately predicted, or more accurately predicted anything out there as far as real estate prices than anybody else has. So,
well, and that's all anyone can go off of it, right? I mean, everyone's going to go off of predictions, but it's not just, hey, I woke up this morning, had a feeling, here's what the housing market's going to do. It's based on specific data, and and these guys are, again, with them being as accurate as they have been. What better information could we possibly have than to consider those data points as a good way to make a decision. So.
Yep.
Well, very interesting, Brian. I appreciate it. As always, please follow us, and if you are enjoying the information that you're seeing here, please subscribe so we can have you get these notifications every week. We'll keep you up to date on what's going on in the mortgage world and in the housing world. And Brian, again, appreciate your time.
You got it. Thanks so much for having me.
All right, we'll see you.